Very good evening to all of you. Welcome to another YouTube live session with me, Srujit Kakkar. Uh, Today is Wednesday, 29th of January 2020, and today we'll be discussing about what is market depth. Now, before we start with market depth, let's get done with the formalities. So make sure you pause the video and go through the disclosure, which talks about the representation, the risk disclosure, and also about the risk and copyrights. So make sure you pause the video and go through it. So let's start with today's topic, which is market depth. Now, to understand, just give me a second. Right, so to understand what is market depth, the first thing is we need to understand what is a market, right? So market is any place where some goods are being bought or goods are being sold, right? So any place where people are buying and selling some goods, that is what we call as a market. And what is this market made up of? This market is always made up of buyers and sellers. The buyers are buying, the sellers are selling. Similarly, when it comes to trading, like when we talk about a stock exchange, that stock exchange is basically a market where people are buying and selling some goods. And what are those goods? Those goods are either your stocks, maybe your future contracts, could be your options contracts, could be commodities, could be forex, right? Could be anything. But again, it's basically a market where people are buying and selling some products. So a market is always, like I said, made up of a product, a good, and we have buyers and sellers who are buying and selling those products. So that is what basically the market depth shows us, right? That in that market, at what price levels people are willing to buy, at what price levels people are willing to sell. But before we move forward, let's talk about first the terminology, which is bid and ask. Because I know at times this is very simple terminologies, but trust me, when I started with trading, I always used to get confused what does bid means and what does ask mean. So let's get the clarity towards what is bid and what is ask, which will make it much easier for us to correlate with this market depth window as we move ahead. Now, the ask is also called as offer. Like here you can see, here it says bids, but here instead of ask, it says offer, right? So it can be called as ask, it can also be called as offer. So what is a bid? Bid is basically a price at which somebody is willing to buy a product. So let's imagine that I have a, let's say, phone to sell, right? So if I have a phone to sell, somebody might be interested in buying that phone. So let's assume that I want to sell that phone, let's say for 20,000 rupees. So what am I doing? I'm offering that phone for 20,000 rupees, which means my ask price is 20K for that specific phone. Right, so that is what ask means, the price which the seller is asking, right, or the price which the seller is offering. So that is what we call as the offer or the ask price. But the buyer might not be interested in buying it 20,000 rupees. He might be willing to do some bargaining. So the buyer might say, okay, yes, you want to sell at 20,000, but I'm interested in buying it at 19.5K. So that is his bid, that yes, if you're willing to sell at 19.5, I'm happy to buy at 19.5, but I'll not be buying at 20. So that is what your bid and ask is all about. So the bidders are the buyers who are willing to buy, and at what price they are willing to buy, that is what the market depth will show you. Similarly, the ask price are the sellers who are willing to sell, and at what prices they want to sell, that is what the market depth will show you. So if you look at this market depth right here, so what I'll do is I'll just give you an example. So let's just for making it simple, let's assume that a stock got traded, the last transacted price of a stock was 100 rupees, right? So let's imagine that was the current market price at which the last transaction happened, which was at 100 rupees. Now what is going to happen is everyone knows that the last transaction happened at 100. So now what will happen is we will have buyers who will be bidding, and we will be having sellers who would be having their ask price. So what is going to happen? The buyer who wants to buy now, he will either be interested in buying at the same price, or he might be interested in buying at a cheaper price. So let's assume that there is somebody who is interested in buying at the same price. So what he'll say is, okay, I am bidding to buy at 100 rupees, plus I would also be willing to buy some quantity. So what is that quantity? Let's assume I want to buy 10 shares at 100 rupees. Now this is the price at which I want to buy, right? There will also be other buyers. Now it's not that other buyers might also be interested in the same price. The same example, if I was willing to sell at 20,000, one buyer was willing to buy at 19.5K, but the other buyer might be willing to buy at 19K, right? Why? Because he wants to do a little bit of more bargaining. So similarly here also in the market, right, the person who wants to buy the most expensive will always be on the top of the list, and the people who are willing to buy cheaper will be lower in the list. So the next buyer will be something like 99.95, Next buyer, okay, seems like my drawing tools are not working better today. Anyways, the next buyer might be at 99.90, next buyer might be at 99.85, next buyer might be at 99.80, right? So these are the buyers, and you can see that as we move down, people are willing to buy cheaper and cheaper and cheaper. So the person who is willing to buy the most expensive is always on the top of the list, right? And similarly, these people would also be interested in buying some quantities. This can be, let's assume 100 shares, 1000 shares, let's say 20 shares, let's say 50 shares, right? So what quantity they are willing to buy, at what prices they are willing to buy, that is what the bid side is basically showing us in the market depth. Now the ask side will be showing us the willing sellers. So if the last transaction, like I said, happened at 100 rupees, now a seller would either be interested in selling at the same price, in which case if somebody says, okay, I'm willing to sell at 100 rupees and I want to sell, let's say 5 shares, then what is going to happen? Because I was willing to buy and somebody was willing to sell at exactly the same price. So you have to remember, unless and until the prices match, no transaction happens on the exchange. For a transaction to happen, there has to be a willing buyer, there has to be a willing seller at exactly the same price. So if somebody is willing to sell, let's assume 100 at 100 rupees 5 shares, so what is going to happen? I will get those 5 shares and this quantity will now show as 5. But now what will happen is the next seller might be at an expensive price, right? And that seller might say, okay, I want to sell, but I want to sell at 100.5 paise. Similarly, the next seller would be at 100 point more expensive price, which would be 10 paise, then 100.15, then 100.20, then maybe 100.25. And again, they will be willing to sell certain quantities. Those quantities can be, let's assume 10 shares, 20 shares, 100 shares, 1000 shares, 50 shares, right? It can be any quantity. So again, on the bid side, the person who was willing to buy the most expensive is on the top of the list. And on the ask side, the person who is willing to sell the cheapest is on the top of the list, right? So you can see this person is selling the cheapest of all the people, and that is the reason he's on top of the list. And this is what the market depth is, right? So like I said, what is market, right? Market is a place where a product is being sold and bought. And what is this product? In this case, we are taking as an assumption, let's assume it is a stock which is trading at 100 rupees. And now that market is also made up of buyers and sellers, and these bids are your buyers and these ask are your sellers. So that is what the market depth is basically showing you, that at what price levels, where are the willing buyers and where are the willing sellers. So now if you look into this example, so you can see here, the person who is willing to buy the most expensive. Now this is market depth where you are seeing, this is called as level 3. So in level 3, you can see up to 20 orders. Generally, you will see most of the brokers, they might give you level 1, and level 1, you're only able to view the top 5 bids and offers. But yes, now don't start looking for a broker where you're getting a bigger market depth, because as we move forward, you will see that this information is irrelevant. This information has no meaning for us, and that is what we'll be discussing today, that does it give you any edge, right? So yes, people, they talk about, if I can see where the orders are getting placed, I might have an edge, but what you'll realize, it actually does not give you any edge. So that is what we'll be talking about. So yes, and in fact, let me do this. Let me just quickly show you as an example. If I just bring up a trading view, and you can see here they have this option which is DOM. DOM stands for depth of the market. So can you see this is the depth of the market, and can you see on trading view, as if now it is just showing me the top bid and the top bid and the top offer. So this person wants to buy at 15.70 10 cents, and he wants to sell 15.70 20 cents. And can you see these numbers are changing? Why? Because these are the number of contracts somebody wants to buy, the number of contracts somebody wants to sell, and as and when transactions are happening, prices are moving up, prices are moving down at times. Now the difference between the bid and the ask is basically called as the spread. Right, now example, if I again go back, when I was giving you this example, that I wanted to sell at 20,000, but somebody wanted to buy at 19.5k, and the other person wanted to buy at 19k. So as if now he wants to buy the most expensive, I want to sell the cheapest. So what is the spread? The spread is 500 rupees. So the difference between the top bid and the top offer is basically called as your spread. And what you will see is that the more liquid a market is, the smaller these spreads would be, and the more illiquid a market is, the bigger these spreads would be. So again, if I go back, you can see as of now the spread is just 10 paise. No, this is in dollars, so this is just 10 cent. But you will see in between it shifts to 20 cent, at times even 30 cents, because this is just based on where is the buyer, where is the seller, right? There is no other logic behind it. It's just the price at which somebody wants to buy, at price where somebody wants to sell. It's their choice. It's an open market. People can define whatever price they are willing to pay. People can define whatever price they want to sell at, and that creates this spread. Now going back to this market depth, right? So here you can see that the top bidder is at 1231.65 and the top offer is at 1231.70. So you can see the spread between this bid and the offer as of now is just 5 paise, right? The spread is just 5 paise. But now as I go down the market depth, you can see the people, like I said, people are always willing to buy cheaper and cheaper. So you can see after 65, we have 40 paise, 35 paise, 30 paise, 25 paise, 20, 15, 10, 5, 0, 0, then we are going to 12, 30, then 95, 90, 85, 80, 75, 70. So can you see at every price levels, we have people who are willing to buy. Now this tells us that how many orders, right? So it's basically one order for 45 shares, 3 orders for 28 shares. Now these can be 3 different buyers. This can be maybe one buyer who has placed 3 different orders, right? So it can be anyways. So we have 3 orders with the cumulative quantity of 28 shares, 1 order for 28 shares, 1 order for 15 shares, 3 order for 261 shares, 5 orders for 243 shares. So it just tells you at what price level, how many orders for what quantity, right? Similarly, if you look at the offer side or the ask, right? So this is, like I also said, is called as the ask because somebody is asking this price to sell that specific product. So here, like I said, as you go down, the price will keep on increasing because the person who is willing to sell the cheapest is always on the top. So you can see 1231.70, but now the prices are increasing, 75 paise, 80 paise, 85 paise, 90, 95, then 32, and it keeps on increasing. And similarly, it is also telling you how many orders for how many shares, how many orders for how many shares, how many orders for how many shares, how many orders for how many shares. And at the end of it, what it does is it gives you the total bid. So it is telling you that as of now, based on all the orders which are placed for this specific script on the exchange, the total buy quantity or the total bid quantity is 2,69,171 shares. And similarly, if you look at the offer side, the complete quantity is 9,48,103 shares. Now, what people they generally do is they refer to this number, and what they say is, okay, this is my demand because that is what people, that is the quantity which people are willing to buy. And this is my supply because that is the quantity which people are willing to sell. And because I can see we have more supply, let me start selling in the market. So this is absolutely incorrect. Why? Because if you believe that it was this easy, then probably, everyone would just open the market depth and they'll see, okay, whether we have more bids or whether we have more offers, and, probably you'll never be making losses in any of the markets. But that is not how it is. I'm pretty sure many of you would have experienced something like this, that yes, you do have more offers, right? Which means you have more supply and you're expecting prices to move down, but what you realize is prices just keep going higher and higher, even though the supply was more. At times you would have also experienced the vice versa, provided you have been using depth of the market. Now, personally, I never use it, but yes, if you look at it, many times what you will also see is maybe this is 20 lakh and this is just 9 lakh. So now we have more demand, but still prices are just moving lower and lower. Now, what is the reason behind that? The reason behind that is that these orders which you are seeing is not at one specific price, right? So if it was at a specific price that yes, you have 2 lakh shares to be bought and you have 9 lakh shares to be sold, then we know for sure that from that specific price point, because we have more supply, prices can move down. So the first thing is this is the cumulative of all the orders placed at different price points, right? So it is not on a one specific price point. Now, even if it is at one specific price point, now example, you can say that, at this price point, we have 45 shares to be bought and 368 to be sold. So technically, because we have maybe more supply, prices should move down. But now the second challenge is that these numbers which you are seeing, these numbers are also numbers which can be faked. So how can these numbers be faked? Example, when you're placing orders, almost all platforms, they have an option which is called as disclosed quantity. Now, if you talk about the NSE exchange allows you to hide as much as 90% of your actual quantity, which means if you're willing to buy 1 lakh shares, you can only disclose 10,000. So even though your actual quantity would be 10 times, in the market depth it will only show you 10K. Why? Because that is an option which is available from the exchange itself, that you can disclose a smaller quantity, which is called as a disclosed quantity option. When you're placing the order, you will see that most of the brokers, they give you that option. So now the reality could be, what if this was disclosed only 10%, but the actual quantity was 450, and this was the actual quantity. So now you can see we have more demand, right? So that is why, one thing, because the quantity can be disclosed, you never know whether these numbers are real or these numbers are fake. Another thing which can also be done is, now let's assume that I want people to believe that we have more demand. So because I want people to believe we have more demand, because currently people are believing that we have more supply, what I can do is, the current market price is close to 1231.65. So I can place an order at 1225. So the first thing is, I will be somewhere lower in the list. My order will, as of now, will not be getting displayed. But now I can place an order at 1225, provided I have that kind of a capital that I want to buy, let's say 10 lakh shares. So if I place an order that I want to buy 10 lakh shares, what will happen immediately? Once my order is placed, this will become as 12 lakh. Now what is people believing? Now people are believing that we have more demand, and because we have more demand, they might be very interested in buying. But I might be interested in offloading. I just wanted people to believe this. And what I'm doing now is, maybe slowly and steadily, I'm punching in my orders, and I'm selling to all these willing buyers who are seeing now that we have more demand, and they are willing, because they are buying because of that. And yes, and when the prices, they start moving down, maybe when the prices they reached 1200 and let's say 28, I simply cancel this order, right? So what is going to happen is, immediately it will again go down to 2 lakh, wherever it is. So yes, you can place these orders to fake the numbers. You can disclose the actual quantity. That is why all these numbers, they have no meaning, right? Very, very important. That is why all these numbers, they have no meaning. Now, even if you're not trying to hide, right, there are orders which are called as iceberg orders. Now, what is an iceberg order? This is what generally a lot of big boys, they use. So what is an iceberg order? Iceberg order is something like this. It is an automated process where, let's imagine that I wanted to buy 10 lakh shares. So yes, my order is 10 lakh shares, but that computer program, or that iceberg order, basically divides it into small chunks. So instead of one order going into the system straight away for 10 lakhs, what it will do is, it will send an order for, let's say that based on the settings which I have done in my automation system, is that I want to send an order for 50,000. So what will happen is, first the order will go for 50,000. Once my 50,000 is filled, then the next order for 50,000 will go. So what happens is, now that 10 lakh gets broken into 20 different orders. But now the problem is, because only one order is going to the exchange, so that is why my real quantity will never be getting reflected. Now, even if when I'm sending these orders, I can still hide 90% of it, and this will only reflect 5K, which means it will only change this by 5,000, right? So this will become as maybe 2,74,000 something, right? It will become 2,74,000, but can you see my actual quantity was very huge? So you can hide the quantity, you can fake the quantity, and that is why all these things, they have no meaning, right? So that is what I started with, that yes, people, they do believe that this market depth gives you an edge. It helps you understand where are the buyers, where are the sellers. Yes, it will show you, but if it was that easy that I could always see, how many bids and how many offers, and based on that you could make a decision, then the condition that if you always have more offers, prices should always go down will always be true. But that does not happen. You will see it almost every other day. You have more offers, still the prices are moving up. You have more bids, still the prices are moving down, because these numbers can be faked. And plus, like I said, these numbers are not just based on an order at one specific price. These numbers are a cumulative of all the orders which are placed in the system. So can you see we are at 1231, maybe the last order is somewhere at around 1200 rupees. So can you see all the orders from 1231 to 1200 rupees, that is the cumulative of this number is the cumulative of all those orders. So that is why you cannot lean against this. Plus I also gave you the other reasons. They can be faked by placing an order which later can be cancelled. They can be faked by using iceberg order, they can be faked by using disclosed quantity. So there are n number of ways to fake it, and that is why the market depth will never give you any edge. What will give you the edge? So even if you're seeing, let's say, more supply and less demand, and what we see on the chart is that what happened was prices were trading in a range, and after that prices have started moving up. So what is giving me that edge is again the price action. The price action is telling me doesn't matter what the bid was, doesn't matter what the offer was. The fact is, the truth is that this is an area where demand exceeded supply, due to which prices they moved up. So now I don't need to know what was the order in those areas, how much was the quantity, or how much was the bid, or how much was the offer. All I know is, because this is an area of rally-based rally, which we call as a demand zone, that is what probably I can use as my trading opportunity, provided it matches with my trade plan. So when you're doing demand and supply, you can see everything by default is taken care of. Again, adding these extra tools, if they were helping in any way, probably I would have told you how you can use it. But trust me, these are tools which, yes, when they are not showing you the real numbers, then how can they even help you, right? That is what the fact is. So yes, that is what I wanted to talk about when it comes to market depth, what information you're getting, whether it is relevant to us, whether it is irrelevant to us, does it give any edge. So I explained to you all the pros and cons of it. So let's look into the chat box and see, do we have any questions for today? If yes, then I'll help you with that, and then we'll end the session. Thank you for taking this topic, market depth, if possible. Okay, yes. And now before we move forward, let me add that the way I'm deciding the topics for these sessions is by the queries or the questions you people are asking me. So if you want me to take a certain topic, what you should do is just put it in the comment section that you want me to do a specific topic. I'm noting down all these topics. Slowly and steadily I'll be taking these topics. And I would also like to add that the timings for these sessions are not predefined. Based on my availability, I take these sessions. So make sure to get notified. You subscribe to my channel, hit the bell icon, select all notifications. That way what is going to happen is 10 to 15 minutes before the session starts, I start the timer. You will get a notification that the session is about to start in about 10 minutes or in about 15 minutes, and then you can join the session live. And yes, if you're liking these sessions, do hit the like button, share it with your friends. If you're on some trading groups, share with your trading group as well, so that other people, if they are looking for certain answers, maybe I might have the answer to that and I might be able to help them. All right, so let me see, if possible, one session on options chain analysis, just to increase our concept in ideology. Thanks in advance. All right, so I'll note it down. In fact, I think I already have it noted down that I need to take a session on options. I think I already have that. Right now I'm with the right person, which I am coinciding my logic and strategies, which I missed earlier. All right, perfect, thank you. Is this orders placed and waiting to be executed? So if demand and supply trader, won't this be useful? Yes, Kanan, these are the orders which are unfilled orders. These orders are still waiting to be filled. These are not the filled orders. The filled orders you see by the volumes. The unfilled orders, the market depth shows you, right? But like you said, if you are a demand and supply trader, doesn't it help us? I have already answered that, because these orders are spread over a very big array of prices. It's not on one single price. Plus, because these quantities can also be faked, that is why they they do not give you any advantage, right? So what will give you advantages is the end result of all the transactions happening. So if the end result is prices they moved up, we know that is where we have more demand. If the end result is prices they moved down, we know that is where we have more supply, right? So price can never lie. These tools can lie, right? So the price action will never lie. Sometimes when the market is in trending, quantity of bid and ask also very directly proportional. So again, Santosh, like I said, don't try to overanalyze it. It's not going to give you any advantage, right? So that is why no matter what you try to understand from it, because the numbers can be faked, you never get any advantage from it. I agree, but for disclosed quantity only available in cash, not in FNO. But yes, even if it is not available on FNO, I can, the way I explained to you, I can place an iceberg order which can hide my actual quantity. I can place an order just to show that yes, I want to buy huge quantities, but when the prices are coming close to it, I can cancel my order, right? So that option is definitely there, right? So I can still fake the quantity in futures by using iceberg, by placing fake orders, right? And then maybe canceling the orders before my orders they get executed. So that can still be done. How the FNO scripts directly proportional to the underlying? See again, the underlying, see again, just to give you a very simple example, or just to give you a very simple analogy. Now, if you talk about milk, right? So milk is basically the underlying. You talk about cheese, you talk about what else? Let's say ghee, you talk about paneer, right? Now, all these things are derivative of milk. So what is going to happen if the milk prices, they rise, the prices of butter, cheese, and all these things will also rise. If the milk prices will go down, then the prices of butter, cheese, milk, they will also go down. So just an analogy. So similarly, your futures are getting their prices derived from the underlying, right? So that is why if the underlying is getting cheaper, you will see futures will also get cheap. If the underlying is increasing, the futures, they also get, they start moving up, and that is how it is. Then why it is constructed and are provided. So again, Vijay, see, there are so many tools which are constructed and provided. We need to understand what information these tools are providing, how relevant that information is. Now, if you think about it with an investor perspective, right? With an investor perspective, SEBI will say, okay, this is something really good because we are protecting the investors. Even if you're placing the order, you can hide your quantity. Other people will not get to know at what price levels you're buying. So in a way, it is in your favor. Another example is that yes, I am allowed to place as big of an order I wish to, right? There is no restriction to it, right? But you can always change your mind. So there is no such rule as that if you're placing the order, you can't cancel your order. So yes, all these tools can be used to your advantages. So as a trader, it's our job to understand what information we are getting and how to use that information, or whether that information even has any value for us or it doesn't have any value. Right? It's just that because people, they don't understand all these things, they start using these tools considering they are going to be very, very helpful. Once you realize it, then you start getting onto the correct path, which is trying to understand the trades by purely understanding the price action versus using anything else. Because like I said, everything else can be faked, but price action can never be faked, right? That is how it is. All right, so good knowledge. All right, thank you so much, Sunil. Right, so please explain how the prices move very high or low, just like a pin bar. That is when prices moves lower or higher suddenly, an instant move up. So Santosh, if you go through one of the session which I did, which was the logic behind demand and supply, right? That is where we talked about that the prices, they move because of imbalance between demand and supply. Now, if let me try to explain this very quickly how this happens. Because we also have an example right in front of us. So just give me a second. I'll just give me a minute. Right, so how does price, they move all of a sudden, a very big move? Let's try to understand that. So let's imagine that I am a big boy, right? And I want to buy, let's say, 10,000 shares, right? I know it's a small quantity, but let's assume I want to buy 10,000 shares. Now, if I want to buy 10,000 shares, I can only buy from sellers, right? That is for sure, because a buyer cannot buy from a buyer. A buyer will always buy from a seller. So if I want to buy 10,000 shares from a seller, and we can see this is what the market depth is. So if I buy from the seller who's on top of the list, how many shares will I get? I can only get 368 shares. If I say, okay, I'm happy buying, let's say 5 paise expensive, now I get another 133 shares. Now I say, okay, let me buy 10 paise expensive, I can get 4 more shares. If I buy another 10 paise expensive, I can get 5 more shares. So what I'll do is, if let's assume I buy 50 paise expensive, this is 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. So if I buy 50 paise expensive, I can get all these shares, right? You're getting my point? So how do I get a bigger fill? The only way I can get a bigger fill is buying at an expensive price. So if I start buying at an expensive price, so if at this point of time I place an order in the market that I want to buy 10,000 shares, I want to buy 10,000 shares at 1232.20. So what is going to happen? All these orders will immediately get filled. We were at 1231.65 approximately, and immediately you'll have a nice big candle moving to 1232.20. Why? Because somebody started buying expensive, and the only reason why somebody would buy expensive is because he wanted a bigger fill. Also the vice versa is true. Why do we get very sharp moves to the downside? Somebody started selling at a cheaper price. Why? Because they wanted to sell huge quantities. So that is the reason behind why prices, they immediately shoot up or shoot down, which tells us that somebody started buying expensive or somebody started selling at a cheaper price, right? So very good question. So I just answered that. All right. Great. So thank you, Bhavesh. So please take session on explaining the candlestick pattern. So Sunil, I've already done a session on it, both in English and Hindi. So if you go through my YouTube channel, you will see there's already a session on candlestick patterns. I've already done that probably a few weeks ago. It means somebody is seeing underlying and placing the order in FNO, or is it algo? See, it can be algo, it can be based on FNO, and it is not just about somebody is doing that. The fact is there are algorithms which are purely designed for arbitrage trading, right? So if there is a big difference between the underlying and the futures, those arbitrage trades will start coming in, because arbitrage trades are more like free money in the market, right? So even before you see it happening, the people who wanted to take advantage of it, they would have already taken care of it. So that is why you will see they always go in hand, because that arbitrage kind of trading starts jumping in, which again brings the prices back to the level in case that spread was getting very big between the underlying and the futures. All right, please take a session on how to mark good demand and supply zones. So NG, I already have it shortlisted for me as one of the session. I will be doing that session sometime very soon, where we'll be talking about not all the aspects, but some of the aspects of a quality zone versus a zone which is not quality. All right, is it market order placed instead of limit order? No, all the orders which you see in the market depth are limit orders. Why? Because limit orders can only be pending. If you place a market order, it immediately gets executed. So all the orders which you're seeing in the market depth, they are always the limit orders. All right, perfect. So that brings us to the end of today's session. Thank you so much for joining in. I will be seeing you very soon again. I guess it will be on Friday, when we'll do the same topic in Hindi, because I do understand some of you are comfortable in Hindi, some of you are comfortable in English, and that is why, I made it as a habit now to do the same topic once in Hindi and once in English. So thank you so much for joining in. Until we meet next, stay safe, enjoy your evening, take care, bye-bye.